Hello and welcome to Moving Pictures Kenya. Today, I want us to address the issue of funding for small businesses here in the Commonwealth of Pennsylvania. To address the issue, today we want to listen to a presentation by Community First Fund. Their lending focuses on ensuring that capital is invested in underserved communities that need it the most. Their goal is to assist entrepreneurs, create jobs, and build thriving communities. And finally, they say that their focus is on transforming lives and communities, one transaction at a time. My name is Bonventure, and this is Serious Business.
And now for our next speaker is Deb Joyce, Senior Community Leader, Community First Fund. Community First Fund Credit Union was founded by Community First Fund, a federally certified community development financial institution with a mission to eliminate poverty and discrimination. As a social and economic justice organization, Community First Fund believes in creating solutions that lead to income, mobility, and wealth building for low-income families and individuals, particularly African Americans, Latinos, immigrants, and women. Since 1992, Community First Fund has provided loan capital to small business owners, nonprofit organizations, and community development projects in Lancaster County and the surrounding region. In 2021, it launched Community First Fund Credit Union to serve underbanked residents by offering ethical financial products and services and creating financial equality through wealth-building opportunities. And Community First Fund is one of the sponsors of EmergeHer 2024.
Good afternoon, everyone. My name is Alba Fernandez. I'm actually the Director of Lending for Community First Fund, and this is Deb Joyce. So she'll be doing some of the presentation. I really wanted to come here to really thank Christine for inviting us, and when she told me about the opportunity to come in front of a group of minority women-owned businesses, we said sign us up, because we really wanted, our job is really to spread the word about what we do, what organizations like us do. So community development financial institutions, or CDFIs for short, were created to really bridge that gap of financial assistance that is out in the marketplace. We help, just like Valerie was able to explain about some of our history. We were created to basically to be able to help individuals that normally would not be traditionally, would not qualify for a bank loan. What we have found over the years is that most of the minority, immigrants, women-owned businesses are also underbanked. So we wanted to be able to also bring consumer services along with our small business services to be able to help them even more, again, to build wealth. So we do have I wanted to also be able to share some information, because I think this information has a lot of power. Women-owned businesses are a huge part of the U.S. economy. In 2024, these are 2024 numbers, we have brought in $14 million in sales. That's almost 40% of all the U.S. firms. We have employed almost 12 million people. That's about 10% of the workforce. And we have generated $2.7 trillion to the revenue nationally. That's almost 6% of the total revenue nationally. However, minority-owned business, women-owned businesses make up 40% of that number. So that's still a pretty huge number. Black-owned women businesses make almost 15%, Latina women-owned businesses make about 14%, and Asian women-owned businesses make about 10%. That's still a pretty large number that minority women contribute to the economy. And then I just wanted to share some of the different industries that make up that number, which all of them are on the rise. And if you can see, about 10 years ago, they've all developed. However, we do find, and part of what we do at Community First Fund is really make sure that the challenges that women face to start their businesses are being decreased. And not just by accessing money, but also by accessing resources. So we've all heard all of the wonderful resources that all the presenters have talked about today. We're a small part of that ecosystem. However, we do make a very important part of that ecosystem, because without money, sometimes we're not able to have that mobility that we would be able to have. So we do want to make sure that that part is represented. So Deb is actually going to be talking about some of the challenges that women face, and how do we really help to to break those challenges.
Hello, everyone. Thank you for letting us share this space with you. As I look around, I just see a group of amazing women and inspiration in this room, so I'm very flattered to be here amongst yourselves. So like Alba said, let's change the focus to what are the challenges that women in general, and specifically women of color, are facing today to accessing all these resources. So Alba shared some pretty inspiring statistics about the impact that women-owned businesses are having in today's industry. So then why is it so hard for us to get the resources and the help that we need if we're making such a big impact? And that's what we wanted to talk to you about today. So women in general, just because you're a woman, regardless of the ethnicity, we're already at a disadvantage. But it is more emphasized and marked when it relates to women of color and minorities. And why is that? Well, there's many reasons, but let's start with 2/3 of women-owned businesses today cannot access either some or all the capital they truly need to succeed. So we're already coming into the conversation at a disadvantage. Our male counterparts don't take us as seriously. I'm sorry, let me get a minute here. So gender bias, that was the word I was looking for. So there's already gender bias and stereotyping from our male counterparts, and that is rejection and not taking us seriously. So this affects how we express our ideas and how these ideas are perceived. So the lack of affordable child or dependent care presents a major obstacles for mothers and caregivers. We're not only expected to take care of ourselves, but we're also expected to have a career, provide for our families. We need to take care of our kids. We have pets, we have in-laws, we have our kids' sports activities, after school activities. There's a very funny woman in TikTok that shared a video about how she's begging God to make her a tree in the next life. So we have all these roles that our male counterparts don't have. So again, affordable child dependent care, that's a major obstacle. It's very expensive to have childcare these days, and we all know that. Like I said, women shoulder an outsized responsibility for unpaid family caregiving. We do a lot of things that we do not get paid for. There's also lack of information about resources that exist for women entrepreneurs. Now, we know that we have the resources out there, and this is why we're here today. We've had so many amazing women share what they're doing for the community and sharing their resources. So what can we do to overcome these obstacles? Well, I think it starts here in this room. If you look around, there's inspiration, there's mentorship, there's experience in this room. So we start organically, and that is supporting each other, finding mentorship, finding networking, finding support amongst each other. That is how we need to start. So access to the resources, and some of these we've already talked about, our other speakers have talked about. So there's the Small Business Administration. We have the Office of Women's Business Ownership. We have the 8A Business Development Program. That program is designed for businesses that have been in existence over 2 years. And they offer technical assistance and training in addition to funding to firms that are controlled by socially disadvantaged and socially and economically disadvantaged individuals. There's the Commonwealth of Pennsylvania. There's the Pennsylvania Small Business Development Center, or the SBDCs. Those offer free counseling to individuals. There's the One-Stop Shop. We heard about that earlier today. There's the PA Department of Community and Economic Development. We also heard from them. And then CDFIs. So a CDFI could be a bank, it could be a credit union, or it can be a loan fund. Community First Fund is a loan fund. And what the CDFI does, it's a designation that tells you that, okay, this institution, this CDFI, is focused on providing access to capital to individuals that are located in urban and rural areas that are low and moderate income. So physically, you're always going to see CDFIs in those communities that need it the most. They also offer technical assistance and training. So my job at Community First Fund is not just to provide capital, but I need to make sure that these borrowers are also receiving the technical assistance that they need to make sure that their business is sustainable and will continue growing throughout the years. And we also offer funding resources. That could be either a loan, and sometimes it could be a grant as well. And then you have your local and regional chambers of commerce. So those are great opportunities to network and receive training. So how are ways that we can access to capital? I'm talking to you about loans, but there's other ways that you can access capital. Some of the most common approaches are personal funds. So you save over the years until you decide to open a business. There are bank loans, CDFI loans, microloans, federal and state funding. You have SBA programs, PA state loan products, and grants. Other more non-traditional options that you may or may not have heard about are grants, angel investors, which are just people that give you a set amount of money and decide to invest in your business. There's private equity and initial public offerings. Some of the new sources that we've seen, and you've probably already seen as well, are crowdfunding. So loan readiness. Let's talk about when you are ready to apply for a loan, whether that is with a CDFI, whether that is with a credit union, or if that is through a traditional bank. What are lenders going to be asking for? What are we looking for? What information are we going to use to determine if we can provide you capital or not? So we're going to ask for 3 years of tax returns. That's going to help us determine the capacity that you have to repay the loan. And this is what we call 5 C's of credit. So the first one is capacity. So how do we determine capacity? We're going to look at your financial history, and that is We utilize tax returns. We utilize profit and loss statements, balance sheets. The personal financial statement will tell me all the assets that you have accumulated and all your liabilities. That will tell me two things. Do we have collateral that we can use for this loan? And also, it's going to tell me what is your net worth. When we talk about collateral, we're referring to something tangible that you have acquired that I can use in the event that something were to happen with the loan that we're not able to collect the payment. That could be a home, that could be a vehicle, that could be a savings account. So those are kind of the most typical. We can also use business equipment. So if you're looking at doing an equipment loan, then the collateral would be the equipment. If you're looking at doing a business vehicle loan, the collateral would be that vehicle. If you're looking to buy a commercial property, the property itself would be our collateral. Then we look at the business plan. Especially for startups, you want to make sure you have a good business plan. When someone comes to me and doesn't have a business plan, they have it all in their head. They're very passionate about it. They can tell me what they want to do and how they're going to do it, but they need to have it in writing. So when someone doesn't have one, I pair them up with either an SBDC, like we mentioned earlier, or SCORE. SCORE is a nonprofit organization that is comprised mainly of volunteers that have been in your shoes. They've created businesses, they've been CEOs, they're retired, and they offer their services for free. So the business plan will hopefully tell me what is the condition, the market condition for the type of business that you're trying to open. And that'll tell me if this may be a viable business or not. If we already have 10 nail salons on King Street, and you come to me and say, I want to open a nail salon at King Street, I may come back and say, this may not be viable. There's too much competition in an already challenging industry. So hopefully the business plan includes marketing research and a marketing analysis, a SWOT analysis. We will ask for business projections and assumptions. Because startup businesses have no historical, I'm going to go by what you're telling me that you're going to do as far as revenue, your expenses, and your net income. But it's not just telling me how many burgers you're going to sell. I also need to know who is your market and how many you're going to sell every day. So those are the assumptions. Don't just tell me what you're going to do, but also tell me how you're going to get to those numbers. So assumptions are just as important as projections. That's going to tell me, again, the condition and the capacity to repay that loan based on the revenue that you're telling me you're going to make. We're going to do a credit check. That's going to tell me your character. So I look at it, okay, how have you handled your past debt? That would be a good indicator to telling me if you're going to repay the loan or not. If you haven't, you can always go to annualcreditreport.com. You'll be able to get a free copy of your credit report for all 3 bureaus. You can do that once a year. It won't tell you your score. I think you have to pay a nominal fee to get the score, but it will give you your report. We always recommend reviewing your report at least quarterly. So what I would say is first quarter of the year, pull your Experian, and then second quarter, pull TransUnion, and then third quarter, move to Equifax. That way, every quarter you have access to a free credit report. And look at it and make sure that everything is accurate. And then skin in the game. 100% financing does not exist. So every lender is going to require some skin in the game from the borrower. That's what we call equity. You need to bring some equity into your project. And that could be, if you're, let's say, for example, you're purchasing a mixed-use building, so we're going to ask you that you put money into the purchase as a down payment. So that's what we mean by skin in the game. If you're buying a business vehicle, we're going to ask you to put at least 10% of that purchase. So sometimes borrowers come to me and they want a loan, but they don't have any cash to inject into their own project. And in those cases, we have to wait until they're able to put some skin in the game. So how is Community First Fund supporting women-owned businesses? Here are some statistics. I won't go through all of them, but if you look at the map, I believe that's like South Central Pennsylvania and includes Philadelphia as well. So the blue dots are loans that we've made to women-owned businesses, and the triangles are COVID relief and grants that we gave out to the community during COVID. So micro businesses, we've given loans to micro businesses a total of 16,664 loans. Micro businesses are all those that have 6 or less employees. And then non-micro businesses, we've done about 384, I think that says. We've done affordable housing and market rate housing. We've done mixed-use real estate, commercial real estate, residential mortgages. So our market in Philadelphia, we do have a first-time home buyer program in that area, so that is just in Philadelphia. And then the grants that we've offered as well. So we like to measure, out of the loans that we've given to the community, what is the impact that it's creating. And we measure that by the jobs created and retained. So our loans have helped either create or retain at least 32,600 jobs. And these are women specifically. We finance almost 2 million of square footage for commercial real estate projects. We've provided 734 affordable housing units for women. And we financed 227 women-owned grocery stores or bodegas. And 64 healthcare facilities. And then client profile, you can see, well, what is the makeup of our clients? So our women clients, 42% are low income, which means they make 80% or less of the area median income of that specific market. And 67% are low and moderate income. 62% of our loans have been given to women of color, 37% to Hispanic women, 15% to Black women, and 8% to Asians. So I'm going to hand it over to Alba again, who will talk to you briefly about some of our women-owned businesses and success stories. Thank you.
Just wanted to highlight some of our women's success stories over the recent years. So these are all throughout our footprint. Woodland Produce is a African immigrant market that we have helped finance. We started with microloans, and she actually ended up purchasing her location recently. Eleanor Home Health Agency is a Lancaster-based client who we have also helped with microloans to get started, and now I think they're in their 3rd loan with us. Pop's House is actually a veteran housing here in Harrisburg that have also started with very small loans with us, and now actually we helped with purchasing a location, a bigger location to do their operations. Sarai's Flower is a Dominican immigrant who actually just yesterday we announced that she won the SBA Women of the Year Award for the Eastern Pennsylvania SBA office. These are just some of the ones that we have done recently. We have been able to pair them up with grants as well. A lot of the work that we do is we don't do it alone. We do use a lot of these other resources in the ecosystem. So when someone comes to us to be able to help them with financing, we don't just talk about a loan. We talk about what else is out there. Can we go to the state and get a minority loan? Or can we get a grant from another organization in the area? So we really try to structure the loan to make sure that we're able to use all of the resources available to make the loan happen. And sometimes it could take a year, sometimes it could take 2 months. It just depends on how readily available these resources are and how ready is the borrower. So, sometimes we do get borrowers that are ready. They come with a business plan, they come with their projections, they know exactly what they want to do, and we get it done. But sometimes it takes time, and a lot of the technical assistance that we provide and the resources that we have out in the community are designed just to do that, to help you work through the process. So we're really honored to be here. We are here to answer any questions that you have. I also want to mention that Tony Maggio is with us. He is our local lender here in Harrisburg. So if you want to be able to get more information, any one of us will be able to help. So thank you so much.
Thank you for watching this edition of Serious Business. I hope you've gained some valuable information about how you can get financing here in the state of Pennsylvania. In case you want more information about Community First Fund, their website is www.communityfirstfund.org. It's down here. Thank you.